Hello friends, so today we'll be discussing about some of the life insurance policies. Nowadays life insurance is a must in everybody's life, but we know that we Indians do not go for such policies. But if we know the details and the advantages and benefits of these policies, then it can turn out to be a very good investment option for us. So I'll be telling you some of the names of the life insurance policies, and we'll be discussing one policy in detail so that you know the benefits, and if you want you can invest or you can start that policy. So life insurance policies are of many types, like endowment policy or term policy or ULIP, that is unit linked insurance plan, or children's money back policy. So there are many types and there are many available in the market. So we'll be discussing about endowment plan. So endowment plan is based on some basic or particular objective of a person or a goal of a person that once wants to achieve in future or maybe after a due course of time. So it can turn out to be a good investment option and a beneficial policy for the one who wants to achieve some objective in future or some goal. It can be to build a house, it can be for your children's education, for their marriage, or for some of your personal reasons that you want to, maybe a tour to abroad or anything. So we'll be discussing this endowment plan, that how it is beneficial. So two major advantages are there. First is it is covering your life because it is a life insurance policy. Secondly, it will turn out to be an investment option because after a certain period of time, that is after your insurance policy ends, then you'll be accumulating a certain corpus that you must have pre-decided at the time of your insurance policy. So if a person proposes a policy to the insurance company, that is the endowment plan, in that case you decide that, for example, I want to get maybe 12 lakh rupees after a period of 15 or 20 years. So I'll propose a policy to the insurance company that I want a life insurance policy for maybe 15 or 20 years, so that after the maturity or at the maturity of that life insurance policy, I'll be getting a sum of 12 lakh rupees. That is for achieving my goals or objectives. For example, maybe this education of my child, or maybe I want to build a house. So I'll be starting that life insurance policy every year or every month, whatever is the premium policy, like whenever the company decides to give the policy. It can be monthly, it can be quarterly, or it can be yearly also. So when you give your premiums year after year for 15 years, say that the policy was of 15 years, so you had decided that after 15 years you want to accumulate 12 lakh rupees. So your insurance policy or the company promises you to give you 12 lakh rupees, but it will be in approx. It is in approx because the returns generated every year keeps on fluctuating, that is between 6% to 8% as per the rule of IRDA. So this is the rule of the life insurance cover, that they'll promise you to give a certain amount at the maturity. So if they are promising you something, they are also giving you return on investment on that. Because of these two reasons, the premium of this endowment plan is a bit high. So but this at the second time turn out to be a good investment option because it is helping you to achieve your goals or objectives in future. So coming back to my example, that I wanted to start a policy for 15 years that will help me to accumulate 12 lakh rupees after 15 years. So for example, year after year, I have been submitting my premiums. In between, I'll not be getting any returns. Like some of the policies are there in the market that gives you some return in middle also. But this policy, that is endowment plan, will not be giving you any return in in between the policy. This endowment plan has two aspects. One is, if at the time of maturity, that is after 15 years, if you're alive, then you'll get the maturity value that is pre-decided at the time of proposing the insurance policy. That is that you'll be getting approx 12 lakh rupees. But second aspect is to this policy is that in between the 15 years, if you die, then your family or the survivor will be getting some of the lump sum amount at that particular time, and the insurance company will pay the rest of the premiums till the maturity of the policy or the plan. And after the maturity, the lump sum amount, or that is the pre-decided amount, will be given to the family of the proposer. So this plan is a very good option, and it is usually considered by mostly HNIs, that is high net individuals, or everybody nowadays, because this insurance plan can turn out to be a good investment option as it helps you to achieve your goal. So major aspect or major component of this insurance, going for this insurance plan, is because it helps you to achieve certain goals or objectives that one has a dream of or one dreams of. So I hope you must have got an idea that what is endowment plan. Thank you.